Hey, good morning, everybody. Happy Friday. All right. So, remember yesterday's scenario? Looks like it's going to play out. I don't know if we'll get down here. It certainly looks that way. But yesterday we were looking for this reversal day. We talked about this head and shoulders top. It came up to resistance. It couldn't get through it, but the daily looked like maybe it could follow through. As we looked at a lot of charts um, yesterday in the green room, while we saw these reversals, the discussion was a lot of them pulled back relatively deep. The angles of retracement were steep. So the idea was if the turn, this could follow through to some degree, it was unlikely it could make new highs, but you never know. Sometimes it makes a deep retracement and we get an M top. Now that looks like it's certainly not going to happen at all. You can see where the spiders are down here, gapping below the low of the green bar. These typically do not get a recovery. I mean, if typically, right, historically, when they say that, it means historically, a gap below that green bar is unlikely to reverse this completely and get back through this congestion area. Let's just see where that is on the hourly. It's just below the pivots, which really sets up for, I don't think, I wouldn't think it gets all the way down there today. That would be a hell of a move. So, there isn't very much support. And this is, part of what we explain as a void. While it's not a huge one, because, this isn't really the kind of blow off kind of momentum move on the hourly chart because it stalled there and went back up. But it's got this correction through time as prices move away from, let's call this little minor areas of support here. Ultimately, most of the time, it's got to get down, into here where traders are going to be more comfortable stepping up, where there's a more, an obvious, relatively large support area, which is this base here. Now, I think if it comes down there, we're going to get some kind of an attempt to go up, and we'll see what that looks like as it unfolds. So for today, gapping below a green bar, clearly, there are longs that are caught at this point. So if it can't get turned around, probably within 15 minutes or so, where it starts rallying back into this bar, it should start heading lower. Really, the psychology of the pattern, common sense. And, part of our discussion yesterday was that while it was on this support to form this reversal, traders, institutions, whatever, are a little bit too overzealous about getting in on such a shallow pullback. And now, Fed, some guys' comments, about interest rates. I'm just kind of really surprised that, many are, and even the markets, you see the reaction here, are discounting what the Fed is saying, Powell is saying, and all these other guys are saying about raising interest rates. And, while there's, inflation is still at 5%, they got to get down to 2%. Unless something significant happens, things start to fall apart and the data doesn't support that, what else can they do? So measured move, typically the way this sets up, comes down into this major support area. That should happen by sometime next week, and we'll see where it goes from there. You can see how this looks. Futures. It may not look like this at the end of the day. So while we're talking, about that gap down under the green bar, which is bearish, this started up here, it's 24 hours, and the futures are sitting at these pivots. Now, I'll just point out here, it's already tested this, right? It hung here and had its little rally up into this resistance area, and it couldn't, and it failed. So once support, or sometimes you get, as a bottoming pattern, resistance gets tested, it weakens it. That's just my perspective of excuse me, of looking at the patterns. Whereas many times you look at something and you say, look at all of that support to the left. Okay. But when it's already been tested once and used as a reference point, it weakens it. It's like trying to knock holes in a brick wall. And, as it punctures through it, it weakens it. And you can see as things are going down here. So I wouldn't be surprised to see some stall near the open. And like I said, maybe 15 minutes or so of trying to reverse it back up off of here. If that fails, then likely it goes lower. And we get to SPX, say, well, lower to where? Well, it come all the way down here in a day. This whole measured move happening in one day. I think unlikely, but how far away can we get from that? And it's got 43.05. I see some of the premium has evaporated. Why did it was more than that before? If I see 43.05 is 80 by 85. It was a little bit more a little while ago because I wanted to get to 4,300. So if we do get a dip right at the open, if there's an initial dip down, I think you have to put on that put spread, down here, pretty quick, because it'll probably start to bounce up and up above here at the 43.90, up above the high of the green bar. And yesterday's numbers, they didn't go near either one of them. So whatever you picked, it worked out just fine. And down here, you've got the support, you've got the rising 20 MA. So it's Friday. It's highly unlikely they're going to get any kind of a really, significant route to the downside here today that would violate this support area. And let's just see the gap in the Qs. Gapping down to the bottom of that green bar, not below it, but you can see it on the support on the hourly chart. But being short-term extended like this, having a run up into the resistance that's over to the left, it just makes sense to have a continued move down to a significant support area where there are going to be more willing buyers to get a turn. Russell, that was looking decent, a week or so ago. That's pulling back quite a bit. Let's look at the futures, get a better view here. Breaking down through the 20, starting to go vertical on the way down, a little climactic on the 5-minute there. And it's on that, what we call minor support, right over there to the left. Let's see what that looks like on the hourly chart. Don't look like much of anything, right? And, that's when we talk about minor support, we're talking about a support area that's beyond what's directly to the left. So others look at it, it can become a self-fulfilling prophecy. Those look like, okay, what was resistance becomes support, so on and so forth. But the significant support is what's directly to the left down here. And ultimately, that is where we would want to consider some type of bottoming pattern. And so we simply match pictures in our bias, right? This had a strong move up. I think at some point it'll turn around. Where will it turn around? Well, there's our support point. All right, mark it off and now start looking for there's something like this with multiple pivot lows and highs that are getting tight together. If this kind of a pattern was forming down here, that would be a great setup for a day trading long, and you could get a significant move up. Now coming up into this gap fill area where I got this alert. And here, so that's probably where it's going to be going, somewhere down there. But again, the significant support is down here. I got to turn it green. Come on. And you mark off the area and then put it on your other charts. You can see the congestion right there. It would make sense for this to come down into this area. There is this bottoming tail bar there, which is just the bottom of this little downside shakeout. So little climactic on the 5 minutes down to this area here. So a little buying there, but really nothing of significance to the left. All right, we got a little time. Part of our discussions this week was keep an eye on the dollar and short-term interest rates. The dollar is gapping up big time here. We talked about this bottoming area. We're actually early in the week, we were looking at this chart. I was explaining about the support and the pullback. And it's, we talked about gold and oil still in this trading range, but that is beginning to take hold. And it is taking hold, especially if you look at, I was going to look at the euro, but look at the Australian dollar, the way that tanked and came down. The euro, which is more correlated with that, that's pulling back, but that was at resistance. So we've got the dollar going up, and our discussion was about, this whole thing with the Fed. They're not gonna, who's that, whatever they're thinking is just keep an eye on this. And, it's holding here, but I said, set an alert here, set an alert down here. If this is starting to move up, the dollar's starting to move up, you're going to hear people tend to not want to be wrong, of course, but those that are saying that they weren't going to raise interest rates, they'll start to bend in their assessment of that opinion. But this starts moving up for whatever they're looking at. Yeah. It's moving back down, going back up. So, bond markets get a little crazy here, especially with all these whippy overlapping prices. Silver and gold are up here a little bit, stabilizing down. I just have no interest in those. Especially anything that looks like this, it's got to stabilize or make a retest pattern. If this could turn around, bottoming tail bar, that could be of some interest next week. Nothing right now. And oil's moving back to the bottom of the trading range. We'll see what that does. So yeah. And lastly, I'll look at the transports. This is more like to turn into an M top. We don't get the pre-market data, but because that'll gap down. We'll see exactly what it does. You can see more of an M kind of a top there on the 60-minute chart. So relatively significant gap down because of yesterday's buying green day, and unless buyers step up here and can turn that gap down into a reversal day, should go down less grudgingly into next week toward that major support point where I think we're going to have a pretty decent opportunity for a few days. All yours, Dan.
Good morning. Yeah, that's exactly our strategy here is playing out. Oh, thanks, Rocco. Yeah, I did that one also. We'll take a look at it. Spiders. So yeah, I mean, we, not Greg already covered it, but yeah, we don't swing trade things like this. We find better patterns too, like everything we entered, was something closer to support. But yeah, we were talking in the green room very clearly yesterday. We pointed out the banks being weak, and that could definitely help set up this weakness and measured move. The SPX, they had big put open interest at 43.50 that expired today. And so I think gapping under this is also causing some of this sell-off, just as if the market were open. The market makers having to hedge those short puts that are now in the money, and it increases their delta exposure, and the only way to reduce that delta exposure is to sell stock. And that's where that concept comes in on these levels and what the market maker has to do. Excuse me. Adobe here, my alarm went off. So this was a novice gap up on earnings, we call it. And so we said yesterday under yesterday's low would be a short, still has a big old void here. And my alarm went off. So it is gapping under that. So that's a short watch. See it down here, pre-market. So that looks really good for short. This Reinert Air has a nasty gap under this consolidation. That's an ugly gap. Now it's down a lot, and my target would kind of be 101. So I'd rather watch a bounce. Yeah, earnings. Where's my earnings? All right, KMX. This is the one we did. We sold the $68 puts way the heck down here. So I already had moved. I sent out a telegram, just moved stop yesterday's low, which shouldn't happen. Or further, you can give it more room, but I'm not going to even pay a penny. I'm going to let it expire at full profit. Not many earnings. Swabai gap to 1184. Now see that's a very bullish gap. Just for a bounce, maybe target 50 MA, which is not a whole lot, but that's gapping over a nasty big red bar. So that would be a beautiful put spread under yesterday's low. Thanks, Joe. Yeah, as you know, we go through them every afternoon starting at 3. And then we're at the tail end obviously of last earnings, and I just looked, we were 26 for 29 on this go around. Where am I? APOG had earnings. I don't see much volume. We'll come back to you. This little dollar stock, nothing going on. XAIR, no, gapping down. That's a bearish gap. So that's bearish daily, weekly, monthly now. But it's a big gap percentage wise, and I don't like shorting under $8 as a general rule. The CGC, that is a power death trend. Look at those moving averages. Incredible weakness. Believe it or not, though, I actually posted MSOS as this is one of the cannabis ETFs. I mean, look at all that horizontal support. So over yesterday's high, I'm going to sell the $5 July puts, and I don't care if it stays in a coma. I want it to either stay in a coma or go up on a naked put. All right. Pick. I saw this thing ripping pre-market. I don't know what's up with that, but man, look, look at the size of this bar. Now, so the market's not open, so the chart has not rescaled yet, right? So look, 170, you can't even see on this chart right now. That's how much this gap is. Pepsi, kind of the feel of an inverse head and shoulder, although not a great left shoulder, but it has a void. My alarm went off, but there's not much volume. Well, let's keep an eye on that. Particularly, Pepsi could be a safety trade in the weak market. This, I like that it's gapping down a few pennies. Now, it's kind of hard to see the whole pattern on that, but see now, it's a multi-month bottoming pattern, greater than 100% retracement, bullish price action, closing breakout with a monster void. So that's why I like this. And it should not trigger if the market stays weak. So it's good to go over the high. Oh, thanks, Joe. Yeah, that's a small little bull flag, Thomas. Sure. You don't have a great void though, and it's at the declining 50, and the market's weak. I always like looking at the negatives too before I get into something. Kind of like, do you remember that when you were a kid? You ask your, mom, whatever, should I do something? I gotta put all the advantages on the left column, all the disadvantages on the right column, and see which is a bigger list. And I kind of do that with stocks in my head. APLD, this is what we call a bull rectangle consolidation. If you were to draw a box around this, here's your flagpole. It did break out this morning. It's coming back in. Well, but even at 10:30, it's a breakout. I mean, 10:30 the price. So we'll come back to that. We are trying to enter this on a pullback. Tableau, wide range breakout, daily, weekly. OCEA is a bio, but nice pro gap breakout, pulling in. I mean, look at your 15-minute chart. Tells a beautiful story. Igniting, came back. False breakout on Wednesday, but downside shakeout made the head sideways again. Now it's breaking out. Now that's a possible buy setup. So if you don't mind bios, this could set up for a fantastic day trade. Box, deep retracement, but potent reversal. Let's keep an eye on this for put spread. APLD we just talked about. Marriott. I always watch these hotels as part of the tourist area. This is a pseudo 1, 2, 3 gapping down. Let's set an alarm at 175.70. That's $2 higher. I already had an alarm there earlier, so now I need a new alarm. Message, why am I looking at message? I don't know. There was some news. Oh, that's Madison Square Garden. I don't know if they did a secondary or what, but they were in the news. APOG, yeah, that's the earnings one. Starbucks, there are a bunch of unions going on strike today, fighting over their contract and, you know, wokeness in their store. Well, not wokeness, pride. It just sounded like, remember what Target and Budweiser got into. So now Starbucks is, don't, you know, want to put all their pride stuff around the coffee shop, and people aren't liking that. But if it can hold, this 99 level, this could be a 0 DTE trade. Let me put this in a window. Starbucks. Well, actually, I put Pepsi in my other computer, so let's put Starbucks right there. MSauce we just talked about. Put spread. TGLS was in the news, but I forget what. But there's no pattern to me. Zulu Golf. This could be a core long for Monday. I like that it's gapping down, because then, you know, our entry would be the breakout. So 47.80, I'll set an alarm. 47.70. Let's go. All right, 47.60, a little bit early. Donut. Ron Barron, you know, the big hedge fund guy, was pumping this today, so you know it's up a little bit, but it's a double bottom in a downtrend. But let's keep an eye on that for a put spread. Doe, this was on Sam I Am's list, top of the range. I'd like it to chop around a little more. Sam gave me this one. Now this one I liked. All right, it's gapping down, so I don't like it now. I mean, it has to trade over Wednesday's high as at 1, 2, 3. But then it's like a massive inverse head and shoulder. And I like this downside shakeout on the monthly with a big void, maybe up, you know, to 150. But the gaps messing it up right now. Triple M had a lawsuit settlement. That's why this is on my list. I mean, I'm wanting a pullback. That's what we're getting. But I got this on my list for a put spread idea. Trupp. Why am I looking at this? I forget, secondary offering or something or other. DY, we're trail stopping out. We had 1/3 position left. So go ahead and take it. A UCAR alarm. This, I was watching this, her little 1, 2, 3. I'm not gonna do anything with it now, but put a U car on your watch list.